go into trade ideas, talk about how we implement this on both a day trading and a swing trading basis, and then we'll get into some cool, I think, stuff at the end. So let's just get started with who I am, who's this guy talking to you, and why you should listen to me. So I actually started trading in university, traded prop firm, which is interesting because we had a prop firm beforehand. There's a lot of things that I agree with that gentleman on. And if you're getting started, to get started at a prop firm, because the stuff he talked about, there'd be someone to kind of hit the button if you're going to do something that's really going to hurt. Things like that, I think, are super beneficial, especially to new traders. So I started in 2006. It's actually when I started using trade ideas. So this is well before I was a consultant with them, but I just started to use them way back in the day to do incredibly basic stuff that I really won't get into too much because it doesn't even apply anymore. So one good thing about using technologies like trade ideas is we adapt to the market when the market changes. Whatever I did back then couldn't be done now, as level 2 reading and things like that. So from then I spent about 10 years working in the hedge fund industry, just doing some risk management and consulting on different trading strategies and things like that, trying to help investors make sure the hedge funds that they were investing in were suitable to them. I'm both a Kaya charter holder and a CMT charter holder. So Kaya is alternative investment charter and alternative investment and analyst. So it basically just means that I can and do analyze the weird securities out there. We won't get into those today, but this was big back in 2008 when it was CDOs and CMSs and all of these crazy things. They needed someone who understood what they were and to help analyze them, because no one knew what they were, and that was certainly kind of problematic for everyone involved. And then the CMT, which I think is right up there behind me, is a chartered market technician. So that's studying, basically, I always describe it as the CFA, but whereas a CFA charter holder will look at the company and the balance sheet and that type of thing, the CMT will look at the chart and the seasonality and this type of thing. So it's one side looks at the fundamentals of the company and the other side looks at the technicals of the company. So I focus on the technicals. So I get talked about, I'm a consultant with Trade Ideas, which is where we're here representing today, and is going to be a lot of the talk that we're going to do when I'm done the initial presentation. And then there's my Twitter handle if you want to give me a follow. So it's I don't have the full slide, but I'm sure you'll hear it a lot today if there's 9 presenters, but none of this is investment advice. We're not financial advisors. What Trade Ideas is a scanning and alerting service, an auto trading service, charting. We sell the picks and shovels when it comes to trying to make better trading decisions. But we'll talk about them a little bit later. One of these promises every time I give a presentation everywhere is I want the first half to be completely educational, whether you come check us out or not. I want you to take away something that can hopefully help you be a better trader. And then I hope that kind of convinces you to come hang out and see what we have to offer to hopefully make it a little bit easier for you. So what is relative strength? Why do I think it's important? I'm not just going to read this full slide, but it's recorded and I'll leave it up here for a second for you to read. But when we're talking about relative strength, I know a lot of people confuse it with the relative strength index, the RSI as a technical indicator. A lot of people, when they hear relative strength, that's what they think, but this isn't the case in what we're looking at when we're talking to today. So we're talking about relative strength in the fashion of what security is stronger, what security is outperforming other securities inside of its world. So whether that's looking at whether Apple is outperforming Google or whether Apple is outperforming the NASDAQ or the S&P 500, the idea is we're looking at what stock is doing better by whatever metric we choose to decide than the overall market. And what I'm going to do in this presentation is I'm going to prove why that's super beneficial and I think really underutilized and underlooked at, and how you can apply some of these things into your trading or investment decisions. So again, just a little bit of definition. We're not talking about the RSI index. We're talking about relative outperformance of a security to its other thing. So I'm going to start by going through three major studies that I looked at and read. The full studies, which was a lot, but these are three studies that basically do a lot of the quantitative research to say what happens if, right, you don't spend your time investing in the beaten up stocks, the buy low, sell high that we've all heard, that kind of thing, but instead look at relative outperformance, put your time and your focus in that area, right? Because as a kind of a quantitative trader and a investment or a CMT, I always want to make sure there's some statistical validity into what I do. I just don't want to, look at clouds and make shapes out of clouds and kind of go from there. So the first one is Jadish. I probably did that wrong. Talks about relative outperformance, and then we go into the Black Star funds, and then the most famous, I think, is this Med Faber fund that we'll talk about right here. So first of all, in the Jadish study, and this was done in 1993, basically they took at if you were to buy past winners and sell past losers, and for this they did a rolling year-over-year basis. So an incredibly easy trading strategy where you just said, listen, I'm going to buy whatever last year did really well, and I'm going to sell whatever last year didn't do very well. Sorry, not last year, 6 months performance. And they did this study from 1965 to 1989. So a pretty big sample set, and showed that with doing this 6 month, saying, hey, whatever worked in the last 6 months, I'm going to buy. Whatever is not working, I'm going to sell. They did an excess compounded return of 12% a year on average, which, I know everyone's looking for the multi-hundred or multi-thousand% return, but if you could beat the market by even that margin for a consistent period of time like this, the amount of growth and the amount difference in your portfolio would be absolutely astronomical. So again, very simple, very wide sample set, which is what I love this study, and great results, right? Again, doing nothing crazy, nothing fancy at all, just I'm going to buy whatever was working over the last 6 months. I'm going to sell whatever's down over the last 6 months, and I'm just going to kind of rotate my portfolio over and over again. So next, we're going to talk with the Black Star funds here and kind of go from there as well. So this is Black Star funds, and essentially what they ended up doing as a quantitative fund is they went through and they said, hey, I'm going to see what happens if I bought stocks making a new all-time highs. Very simply put, a new all-time high, and then put, I believe it was a 10 ATR stop on it. So ATR is just the average true range. If the stock moves $1 in a day, they're going to put a 10 times multiple on that and just put it on a trailing stop. So 10 ATR, that 10 ATR range would be $10 in this case, and just let that trail. And what would the distribution of returns look like? Again, having no other criteria than buying things hitting new all-time highs, right? Again, a very simple idea, but that concept of doing anti-buy low, sell high, right? Buy high and sell higher. And you can see the distribution of returns is pretty wild here, where a large majority of them hovered between kind of 0 and negative 10%, 10%, which makes sense. Most stocks don't do much of anything for long periods of time, but the amount that actually dropped, you're talking 25 and 79 shares that dropped 50, 60, 90%. There wasn't very many throughout, but the ones that, over doubled plus, right? So if you think of an absolute return of being, you're looking for 100% loss versus 100% gain. You're either going to double your money or lose it all. Just doing this simple thing made sure that you were sticking with a lot of and putting the statistics on your side. The amount of profits to be made on a trading strategy like this, and profits to be lost on a strategy like this. Again, that was asymmetric, or the distribution, right, was asymmetrical. Sorry, was the word I was looking for. So again, just another great study, just to show the concept of splitting this up. The other one is MEB favor. This one we actually study in the CMT curriculum as relative outperformance. Did a couple things. The chart I'm highlighting here is essentially what happened just doing sector returns. So the same kind of thing as the first study, where they said, hey, what if we just rebalance into whatever the top, when you see top one, that would be the whatever the best overall sector was in the last year. So energy coming into this year was the best sector. So if you had bought energy and only energy, you could see how well that did. Top two would be the top two ETFs, and top three being the top three ETFs. So versus just buying and holding the S&P 500. Now you can see that all beat them, without showing and diving into all the numbers. The top three had the best risk-adjusted return. Basically, just you're diversifying a little bit. So say going into this year, it was energy. What else was doing okay this year? Financials are doing okay this year, and staples were doing okay this year. So you would split your portfolio into those three. So again, using the trailing 1 year returns, just rolling into the top sectors, you can see the relative outperformance. So all of this was just to say, if you look hard and you read the studies and you're okay with doing the work and everything, you can then go through and say, hey, this was just simply buying the stuff that's strong, just simply buying the strongest names in the market tends to outperform buy and hold, tends to outperform more specifically and more importantly type buy and hold. So just which is just so let's get a little further into this. So how is an approach that you guys could take away if, obviously we believe trade ideas will help make a process like this easier, but say you're not interested in that, how would a top-down approach to relative strength work? How would you simply take a look at the overall market? Well, it usually starts with the overall market, and this is whatever you're looking at. Trade ideas, we deal with US equities. You could do the same thing with foreign equities. You could do the same thing with cryptocurrencies. You could do the same thing with different FX. I've seen people use this same process throughout. So step one is you look at your overall market. So in this case, probably the S&P 500 we'll use as a benchmark here. Then your individual sectors within that market. So, in the cryptocurrency space, this could be like DeFi tokens versus metaverse tokens versus, tokens that are supposed to be securities, something like this. In the actual equity space, this looks more like energy, financials, technology, utilities, these different sectors. And then from there, you zoom into the individual securities. So you get your thoughts on the overall market, you get your thoughts on your individual sectors, and then you get your thoughts on the securities within that sector. So, we take a look at the overall market. Here's a very simple scan we have from the S&P 500. So I see one question just coming in. Is this long-term? No, I'm going to show how we have systems to do this intraday as well. We have a relative strength scanner that I use myself intraday. And we'll talk a little bit about that. But it's easier to conceptualize, I think, when you're talking longer term, because, intraday, you gotta be really, really quick. So I just want to get the concept down, and then we'll kind of hop into the system, and I'll show you some things that we can do. So this is a scan that we can look at. We can simply say, okay, what is doing the best? And I have this sorted by year-to-date change. These are all the ETFs that I look at personally and I go through every night, but we have in the system we just talked about here are year-to-date changes that we can go through. And, no real shock. We have energy, corn, wheat, all of these things at the highest of the different sectors going into this year. So what we want to do is we want to compare that sector versus the S&P 500. So the top chart here, the dark blue line is XLE, and the bottom line is the SPY. This is a little bit dated just because I wanted to make sure I had the right charts that kind of painted the best image for the process here. But you can see very easily if you go from the beginning of the year to date, energy is up, basing and chopping around a little bit recently, but you've been way better off having your money here than the SPY that's just been in a nice downtrend until this chart was taken, and then obviously up a little tiny bit after that. Next, you would go into your individual securities, right? So we talked about market, sector, and then securities. So now we're into the individual securities, and we're looking here with the dark blue line being Occidental Petroleum, which it's been an absolute rocket ship now that Warren Buffett's gotten involved. And then the bottom, the pink line, is XLE. So we're saying energy doing better in the S&P 500. You can see the reason I split these charts out is you can see that it's not just cherry picking the absolute percentage return. These have been trends that you could have gotten involved in many times throughout the year. And then within here, we're looking at the individual equities versus that sector. So XLE, which is energy, is doing better than the SPY. Then we have Oxy, which is a oil producer, doing better than the XLE. So using this kind of top-down approach, you can then evaluate and say, okay, Oxy is something that I may want to take a look at. Now, this is the easy part. I just want to go through the basic concept of relative strength. We have basic scans that we can do this, but this is something, again, that you could kind of take and do a little bit of yourself. If you just, put everything into a spreadsheet, sorted it by how high it is in its range or yearly return or something like that. But that's the easy part. So then what do you do with this information once you've acquired it? So one thing is portfolio rotation, and we have a portfolio rotation model that I'll show you guys in a bit, where you're just going to do what a lot of the studies that I just talked about did, and just said, hey, I'm just going to constantly update. I'm going to pick a monthly or a quarterly or even a weekly time frame and say, I'm just going to roll my portfolio into whatever is the strongest stuff. Sometimes it'll probably be really fun stuff like technology or biotech or something interesting, and other times, especially this year and a little bit into last year, it's going to be really boring stuff like Oxy and these bigger names. So that's one thing you can do. It's just this portfolio rotation that you can do. Again, the idea is you're using the studies that you found or that I found that just show the statistical outperformance you would have by rotating in this portfolio. And then you're just sitting down and doing this work yourself. This gives you a great systematic approach for trading or investing, again, long-term, and we'll show some intraday stuff later. The other is selection criteria. So say you wanted to go one level deeper and you just didn't want to just own the stuff. You have a trading strategy that involves some sort of indicators or price action or candlestick patterns or something, and you want to apply something like this, but you want to use this as selection criteria as a scanning tool. We do this a lot with our clients where everyone's like, okay, I now know that Oxy is stronger than the XLE, and I know that the XLE is stronger than the SPY. That doesn't necessarily mean I want to own it, though. Let's wait for a setup or create a setup or use some technical tools to help us there. Right. So here is a simple idea, right, with Oxy, which is just, where are we right now? It's about 73 after I took this. So kind of in this little still in this range, I guess, between the lows and the highs. But you could just say around $60, give or take, there seems to be some support there. So as long as Oxy and the energy sector remains relatively strong, I'm going to find support areas and I'm going to buy those support areas. Or for you option people, I'll sell puts below them or something like that. And as soon as it no longer is relatively strong, as soon as nobody cares about energy anymore, I'll move on to whatever's strong at the time. All right, here's another thing where you've got a MACD cross, right? Maybe you're a fan of MACD or moving average crossovers or RSIs or something like this. Again, you can make these things more impactful by doing this filter. The reason that a lot of these indicators don't work on their own and just kind of, trade their own thing is that there's they will work generally when the stock is trending or when the stock has something going on or there's something moving, but they don't work when the stock's just kind of chopping around. So as a selection criteria, you could say, hey, I am going to remove, right, all of these kind of different things and just say, hey, I'm only going to focus on the stocks that are the strongest, but I'm then still going to apply my systematic macro indicator, whatever it is that that you look at there, and say, hey, I'm still interested in XYZ. I'm still interested in my moving average crossover, or my RSI divergence, or whatever it is. I'm just going to apply it to whatever is the strongest stuff as well. I see a question about looking at the studies. I'll go back and I'll show you that slide so you can take a screenshot when we're done here. So flaws with just looking at percentage gains, right? So it's nice that it's nice that these studies exist. It's nice that they prove to us this certain thing of looking at the strongest stocks outperforms looking at the weakest stocks. This is kind of to cut the fat, what we're learning here. And, by doing that, again, we can apply our approach to it. But there are some flaws with this approach, and we want to look at that, and we want to see if we can do even better than those studies talk about and maybe get around those a little bit as well. So, one percentage gain could value cheaper dollar securities, right? It's just the nature of it. A $1 move in a $10 stock is 10%, but a $1 move in a $100 stock is 1%. So, it's a different. Just looking at percentages have that flaw where they're going to be very price sensitive, and a percentage gain could be a one-time spike. So, if you captured your data at a certain time when all of these meme stocks were going crazy and people were actually interested and invested in those, you could have had like GME and Bed Bath and Beyond and Best Buy and all of that kind of stuff. AMC, yeah, you could say, hey, these are the relatively strong stuff. I'm going to buy a portfolio of these, right? That would obviously be problematic because those things spiked and have been in a downtrend ever since. So you need to think about that, right? If you just look at the percentage gains, you are vulnerable to those kind of one-time spikes. And then also percentage gains can favor high beta securities in uptrends and low beta securities in downtrends. Don't necessarily know if that's a flaw. Essentially just means that when the market's in an uptrend and is in a strong uptrend and is moving well, you're going to be put into a lot of names like tech is a big high beta thing, right? So think Peloton, think Zoom and all of these things during the pandemic, right? These really unprofitable, crazy high beta names, and they ended up doing very, very well at that time. And then when the market pulls down, low beta securities you'd rather be in. And for those who don't know, beta is just a measurement of two things: how correlated is your stock to the market, and then how much does your stock under or overperform the market. So if your stock is a beta of 5, that means if the market goes up 1%, your stock's probably going to go up 5. If you have a beta of near 0, it means that your it doesn't matter what the beta does or what the market does, your stock's not going to really care. So that could be a flaw or not, depending on how you look at it. So what we want to do is we kind of want to redefine relative strength and say, hey, how can we get around these potential flaws using the same concepts that we just learned about to kind of build portfolios or to make better decisions when we're talking about trading and investing, right? So we need to think of what was the primary goal of relative strength. right? So again, I kind of cut the fat and spoiled this a little bit earlier, but the primary goal of relative strength is just say, hey, I want to buy the stuff that's doing well based off kind of whatever metric we decide to do, and be out of the stuff that's doing poorly. That's a question. So beta 1 equals 1. Yeah. So if you have a 1 for a beta, basically means your stock is going to move pretty much exactly in line with the market. Generally speaking, people use beta to the S&P 500. Just FYI, it's a measurement I can show you guys in Trade Ideas as well. Higher beta is going to be, that double-edged sword of when you're right and when the market's going up, you're going to make more money, and when the market's going down, you're going to lose more money. But yeah, the goal of relative strength is just to say, hey, I know that trends persist longer than they should. So if I'm in the stuff that's the strongest stuff out there, I'm going to have a way better shot and a way better chance of outperforming the market and making really good trades and really good trading decision. I want to make sure that I'm always kind of pushing in that direction. So, saying that that's the goal, which it is, there's a couple different ways we can then define this concept of what is and the goal of what we're trying to do here. So are there other ways to compare securities as opposed to saying this one is up 5% and this one's up 10%? Are there other ways we can look at? And yes, right, spoiler alert. So one is, position in range, which is a way that we normalize it. Basically saying, and we'll get into this, if the stock's right at its high, it's 100% position range. If it's at its low, it's 0%. We'll get into that. Or can we use indicators to help us define what is strong and what is not? Image not found. Hold on here. What if I hit Control R? Will that? 1 second here. I think I might just need to refresh something. So you guys have to stare at my now. Perfect. Okay, we're back. And presenter view and present. So, now I just need to reshare my screen and we're good. Keep going. Perfect. And bring back my chat. Okay, great. All right. Past all this stuff. And we were right here. Okay. So position range. Do I have that? Okay. So we can take a look at this. So should do that in this order. So the way when anyone talks about position range, essentially what we're just saying is that if a stock is at its high, that's going to be, the high of its range, 100% position in total range. And then 0 is the low of its range and 0% its range, right? So you can have kind of any variant of this, but beauty of this is what it normalizes a little bit for that concept of, hey, different dollar securities can have, and different beta securities can have different percentages gains. So, right, that's something that we have in Trade Ideas. You can easily scan for stocks in the high end of its range. And this is where we're going to talk about multi-time frames. So you can do it for, I think I had 20-day range. It says 20-day range, but I think this was actually year range. But we have 20-day range, 5-day range, intraday range, 60-minute range, 30-minute range, 2-minute range. A lot of these concepts will apply throughout. So now that we're into it a little bit deeper, if you're looking for relative strength on a daily or an intraday kind of idea, you could say, hey, I think the market's, about to make a new uptrend. Well, right now I'm looking at the SPY. We're kind of choppy, but a little bit of a downtrend of the day. I think the market's going to roll over. let me quickly scan for all stocks that are hanging out right near the low of their range using this position and range filter. I'm going to scan through them quickly. I'm going to find whichever one I like, and I'm going to punch into a short, knowing that these stocks are going to be weaker than shorting the stuff really at the high end of the range for the day. So I did a little bit of analysis of the position and range versus the S&P 500 for going back to 2016. So the light gray bars are the S&P 500, and the dark gray bars are basically just buying the top 100 stocks in the S&P 500 by the position and range. So using that kind of, hey, I want the stuff that's right near the high of its range, and I want to buy the top 100, and I'm just going to rotate into that yearly. Again, a very barbaric, simple study just to prove a point, not something that I would just generally trade on its own. But you can see that often you have an outperformance. I think in more than half of the cases, it outperformed the market. In some cases, it outperformed the market by 20, 30%. 100 meaning near the 100 range. No, so the top, so I took the entire S&P 500, I sorted by the position and range from the top to the bottom, and basically said, what happens if you bought that top 100 securities? And then next year you did the same thing and you sold all those securities and you bought the next top 100 securities. And again, pretty good, pretty dramatic outperformance on some years. On the years that it underperformed, it only underperformed by a little bit. So simple idea, same thing that a lot of the other people were talking about as well, saying, hey, if you just buy the stuff that's strong, simply put, then you outperform the market. And in a lot of cases, you outperform the market with an idea like this. And then here's a buddy of mine retweeted me on Twitter, and basically we were just talking about using RSI, which is an overbought, oversold momentum indicator. And basically we were the chat we came up with, and I like the way he put it. He said, if you own a stock that's getting below 30 on the 14 RSI, I think you're owning the wrong stocks. So what happens if we just measured and said, hey, we've got this momentum indicator that can either go from oversold to overbought, but what if the stock is never able to get oversold over a long period of time? Right? What is that a good thing? And, turns out this is Poshmark recently, after I made this image, got taken over. But you can see how this thing really was underperforming the S&P 500, sometimes by a pretty significant margin all year. Just recently started to outperform it by the end, but all year it was underperforming the S&P 500. However, the RSI that I have listed here, even though this was in a nice downtrend, was never able to get under that 30 mark, was never able to get oversold, even though, right, it was underperforming the overall market. So by these traditional metrics, you could say, hey, this is a weak stock, or you could look at it and say, this is actually a pretty strong stock, right? Depending on what it is that you're looking at there. And so I did the same thing. I said, okay, let's grab the S&P 500. Let's look for the stocks that were not oversold, and then rotate into those. You can see a little bit more of a mixed bag, but in 2018 here, it did really better than the market. On the times that it beat the market, it did by a pretty good margin. On the times that it failed to beat the market, it did so in a little bit smaller margin. This kind of beat in 2018 was really nice. Again, just taking the same concepts, the same ideas, and saying, okay, what happens if we just keep exploring this with different things? So what happens if we put it all together? So we remember the primary goal of relative strength, which is just to keep us in the stuff that's the strongest names in some sort of a systematic way. We look at other ways to compare securities with position and range and indicators and things like this. And then what if we put it all together? So this is where the trade ideas side of things come in. This is a relative strength, a TI strength system that I built using trade ideas, and we've tested back tested 2017 to 2021, and then we've been forward testing it from 2021 and onwards, which just means, testing it as it goes with live data. And essentially, you take the position and range, which we chatted about. We took the handful of the indicators that we chatted about. I talked to the different traders that work at Trade Ideas, and I say, hey, what is something that you define as strong? And, someone may say, hey, I think strong stocks are ones that are well above their 200-day moving average. So, okay, let's put that in the system. Let's run some tests on it, that type of thing. Other different price actions, candlestick pattern recognition, things like this. And then you start to weight them, and you start to say, this is what's really important to me as a trader. And I really think a stock is strong when it's doing this. And then this is something that's kind of less important to me as a trader. I don't think a stock really cares if it's doing this, that, or the other thing. And then you rank those stocks. So you're able to come up and say, hey, I want to always look at whatever the strongest stuff out there is each and every day, and kind of ignore everything else. What you end up getting is a systematic system that, outperforms the market. It's not a perfect system, right? Here's the P&L graph of the orange line being the system rebalanced weekly, and then this line being the S&P 500. You can see when the pandemic happened, the system took a pretty substantial pullback, and when the market's not going much of anywhere, you can see kind of some choppy action right here. And then again, all through kind of 2021, when the market was kind of choppy, this thing was beaten around as well, but over the long run and pretty consistently outperforming the overall market. So end phase, right? There was a time that end phase was called in the system. Do I have the breakdown here? Yeah. So we'll look at this chart for a little bit, but basically, the concept being, the upward sloping 200-day moving average, which is the blue line here, right? You would give the system 2 points in your ranking system. The 50-day is another metric that people liked. If that one's upward sloping, you would give it 2 points. If the 50 days over the 200, you give it 2 points. You see where we're getting, right? The RSI unable to get oversold, you give that a couple points. The MACD, you give right near the high of its range, you give that a couple points. So by combining all of these factors, you end up getting a pretty robust list of, hey, this is what's doing really, really well. And let's just constantly try to figure out how to get into those. And the rotation of that is very, very important, because I will say during kind of the 2020, when everything was going crazy, you would see this system in names like Peloton and Zoom and Netflix and all of these names. And when the market changed, and when the world changed, and money stopped being free and all of those things, you had this kind of dramatic switch where now it's in a lot of names like energy and real estate and natural gas. I think there's a natural gas one this week, and finance and that type of thing. So understanding that something that is not, just because something is relatively strong, it will not remain relatively strong. So you have to have a system when you're building these systems. You have to have one in place that rotates it as well. So let's get into the system. But before then, I was actually chatting with our marketing manager, and we have a link here. Let's see how this loads up here. To get you guys involved if you're interested in this TI Swing Picks, which is the system we just talked about. But I did promise someone, so let's go back to keep the studies up on screen here for a second. You can grab a screenshot. They're all publicly available studies. I was able to just find them and download them and read them. I know, again, the Meb Faber one is the one that I would really take a look at. It's very visual and looks, I think, explains the point very nicely. And it's also taught in the CMT curriculum. So if you're ever interested in becoming a CMT or something to that effect, then, you get a little bit of help little bit of a head start there, I guess. So I'll leave that up for another just couple seconds if you just want to grab a screenshot or just kind of copy them down. Thing I like about them is they span a long time frame, right? The 2010 one kind of shows that this stuff still works. When we go back in time, we see that that kind of stuff kind of works as well. Just to show that this is a concept that isn't like a new idea, right? This is something that's existed. I think the first one started in 1965 and then carried its way through until now. So, all right. So we have that left up. Now let's just go into the system. We'll show you around, because what I just showed you and what I just spoke about is, kind of is a very small part of what we do is probably the best way to put it. So again, we have that system, and we have that ability to say, hey, we're going to rank all these things for you. The link that I gave you just basically gets you an email that shows you the stuff that's kind of working the best and all of those things. Sorry, I just had a notification. Wanted to make sure everything was coming through okay. But at its core, Trade Ideas is a scanning and alerting service that you can use to find whatever you want, right? So myself, I am very into the relative strength concepts that we talked about. It's kind of a cornerstone to not only my day trading, but my swing trading, my long-term investing, the whole 9 yards. I'm always looking for what is strongest. But within Trade Ideas, there is a whole bunch you can do if you don't agree with me and you have your kind of your own thing. Let's bring up the strength alerts now. So the link I gave you again is for the email, just to get you started. But if you end up liking that, or you end up wanting to do more than that, we have this scanner that updates every 10 seconds, which is using the same concept that came through with that performance chart, and just showing you live in real time all day long what is the strongest stuff from this kind of swing point of view. So as I click through this, you can see the charts change. We have a full live real time charting suite. This chart on the top is just a daily candlestick chart with a new indicator that we are working on that reads pattern recognition for you. On the bottom right here, this is the comparison charts that I showed you. The teal line is whatever security I'm looking at, and then the pink line here is the S&P 500. So as I click through these, you can see these are all strong stocks that are outperforming the S&P 500, at least in the short term, if not kind of for longer as well, right? Right, CPRX looking very strong. You can see I actually have an order in CPRX that hasn't got. This is the Interactive Brokers E-Trade right now. Alpaca is coming soon, and TD Ameritrade we're working on as well. But yeah, you can just simply come through and just click on buy or sell, and then click on the chart, and that's how I put out these orders right here. In fact, I can just do it again if we would like, and we'll just cancel that order. Maybe cancel this one too. That's the stop order. Right. So say I just want to, I like this chart. I want to send a buy order to my broker. I can just click buy on the chart, and I can click it right there. And it will then send this order to my Interactive Brokers account. I'm on a little bit of a demo right now, and say, hey, if this thing gets to this price, I want you to buy some, and I want you to put a stop loss down here. It will customize and calculate your risk based off whatever it is that you decide to put in the system. If you're risking 100 share, if you're risking the other ones as well, you can go through and do that. So this is just, again, the very bare minimum of kind of what I'm showing you, just to look at that. Not only with the link that I gave you there in the chat, you have access to the 5 picks that are kind of sent out each week that make up that algorithm that I showed you. But you also have access to, if you want to come, TradeIdeas.com through that link, and then get up this full product that has way more than I'm going to be able to cover in about the 10 or so minutes I have left. So a couple questions, and again, ask away. You know, as you can see, I'm a pretty laid back presenter, so certainly ask, and we'll go as I'll answer as they come in. So does that work for currencies and FX too? So the concept of relative strength, yes, I've seen people build systems and basically say, you know, I'm going to compare everything to the dollar, and I'm going to look for whatever the strongest currencies are versus the dollar, or versus whatever you want, and I'm going to find a way to kind of rotate into those. So, if the euro is doing better than the pound, or the yen is doing better, right, just doing them all to the dollar as well. Now, our system currently, we're going to be looking at crypto and FX very soon, but currently is US equities only. So what would the monthly fee? So for the platform itself, we have 2 products. One is, I believe, 100-ish a month, and one is about 200 a month. The difference being, the $200 a month gives you access to our artificial intelligence, which I'll show you in a second, the ability to auto trade your own strategies within Interactive Brokers. If you build a strategy you would like within the system, you can push that over to Interactive Brokers and say, hey, trade this for me. And some other perks like access to more charts and that kind of thing. So this was just to show you that, yeah, we have one of the benefits of Trade Ideas is that it's pumping all the time. It's doing that calculation that I talked about, where it's ranking all of these securities, and it's doing it across the entire market in real time and updating this list every like 5 to 10 seconds. And again, so it's just going to spit you out a list and say, hey, if I agree with Michael's philosophy, these are the list of things that I want to look at. Now, intraday, we've got some really cool technology, but first I wanted to show you some of the auto trading. So this is just a demo account that I'm playing with, just to show you guys. I put through one of my trading strategies into this and had all of these things auto traded for me. So each of these trades was put out with an entry and a stop loss order, completely without my interaction. I loaded this up last night and I told it what to buy or potentially sell. And then I've been doing other things until my presentation today. So this is the kind of the trading module. I can drag stops up or down on the chart. So say step, I wouldn't want to lose any money on this one now. So I can drag that to even, and you can see now it's updated this. So this will be a profitable trade kind of regardless. It's going to send that updated order to my Interactive Brokers account as well. So, talked about a lot of daily stuff. We had a lot of a question about the intraday stuff. So we're going to get into that intraday action here. I'm just waiting for this scan on my top right here, kind of right in this area, to update. So what this is doing all day, based off a list that I put in it, is it's showing me in real time what the strongest names are at this exact moment. So this is kind of the same concept we talked about with relative strength, but done real time for day traders. So I know UNG right now must be pushing up a little bit. You can see here on the 2-minute chart, we have it's pushing up. And if you look at this versus the SPY, which is the chart, the little chart, thumbnail chart on the far right, it's doing a little bit better. So now Redfin just took the lead. So you can see this one starting to push up a bit. So this scanner all day long in real time, as you're seeing it, is basically looking at stocks and saying which are the ones that are just showing the best strength, just over and over and over again. What's the strongest right now? What's the strongest in this moment? What's the strongest in this moment? So if you end up liking the concept that I talked about, a scanner like this is great. Now, we can use the same thing for stocks that are selling off. I'm just trying to simplify everything here. And you can see as I click on one, I have kind of a multi-time frame update. So down here is a daily chart, And then we have a 5-minute chart on the bottom here, and then we have a 2-minute chart on the top. And this is just kind of showing you that, hey, right now, Geo is, of this list of stocks that I have, the strongest name out there. And, maybe it's looking to kind of break above VWAP here. I can quickly check the daily chart. I can check the intraday chart. If I want to, I can pull out this list right here. And this is kind of a data sheet that comes with all of this as well, where, right, we have a profile. So if I want to read a little bit about Geo, I don't really know what they are, but it looks like it's a REIT. It's got all about the company, the industries, subsectors, everything it is. I can go check on the latest news. So I can say Geo Group higher after Sitcon Management. So that's Michael Burry's fund, bought some, right? So, and if I want to read more, I can click on this. It will open up a web browser, and it will, I can read that in there as well. So I can also find companies that are like Geo. So these can be Geo's competitors, or they can be stocks with similar price action to Geo as well. And again, I could go on like this forever. I have probably showed a small percentage of what you can do. We have access to scan a lot of pre-built scans. So we have candlestick patterns like inside bars and outside bars. If any of you are the strat traders, we have some scans for the strat. We have support and resistance scans. We have moving average crossovers. We have stocks that are recent IPOs with Bollinger Bands and gappers and RSI divergences. And this is all the pre-built stuff. If you want to get crazy, you can actually open up and you can start to build your own scans. And I'm just going to scroll through this, but this are all the criteria you can use to build your own scans. So again, moving average crossovers, MACDs, candlestick patterns, volatility ranges, right? Whatever it is that you'd like, all the way down to stuff that as a CMT, I don't really concern myself too much with, but for you fundamental traders, you can see a lot of fundamental type data. And this is all stuff that you can do yourself. Now, I won't go too much longer because I just don't want to rant the whole time. But let's say that you built a scan that you think is pretty good. I don't know if I have one that will actually back test well, to be honest, but I don't know. Let's do that one. So I built this scan. I think this is a pretty good idea. I'm not too sure, however. So what I want to do is I can back test it. And again, you can do this right in the system. So this back test is set up. So what if I buy this stock in the last half hour of the day? I exit it the day after tomorrow. I've got some risk management in place. I should turn those off, but you can put in risk management for how much you want to risk versus how much you want to gain. And you can say, I want to back test this for 1 quarter back worth of data. I just want to hit the buy button. So in this case, this one you wouldn't want to buy. Maybe you want to short this. But you can see this is what would happen with this thing. So if I built this and I thought it was a good idea, well, I can test it and go, okay, well, maybe not. Maybe this isn't something I want to trade. I can see a calendar breakdown of every single trade that would have occurred within the system. And just by clicking on a stock in that calendar, it will bring up the chart. I should probably do it. Let's do it. There was one yesterday right here. It will put a entry point. You can see it would have bought the stock right here, and then it would have sold it the next day at, I guess, pretty much the exact same price. So bought right there and then sold again the next day. So it annotates the chart and says, here's what would have happened if you took this individual trade. So again, all of this built into the system. You're able to go through and kind of do whatever it is that you would like to do. You can customize these. You can say, okay, well, maybe I'm completely wrong. What would happen if I took the same strategy and did the exact opposite? Well, now it's starting to look pretty good. So I don't know, you could maybe label this the Costanza trade and start doing that. So tons and tons and tons of functionality, which is why I want to always focus on a core concept like relative strength, just to make sure that there is a fundamental and a reason why I trade what I trade. Because even myself, again, I've been using this system since 2006 and consult with them now. I could see myself getting a little bit lost in the sauce if I wasn't too careful when it came to what it is that I was going to focus on. So question there, does this work in the Forex market? Not yet. We are looking to, our partnership with Alpaca will allow us to start looking at cryptocurrencies, and we're going to look at regular currencies at the same time. As someone myself who trades Forex as well, I will certainly be welcome and open to that. So just to sum everything up before I say thank everyone and bow out, is that if you take nothing away from this, but the simple concept, and you're not interested in coming to try trade ideas for whatever reason, obviously we hope that you do, using the link up in the chat there. Just the concept of buying stuff that is stronger than the rest of the market, buying stuff that is in uptrends and has been for a period of time, depending on how you rank strength, if you're a Elliott Wave person or a moving average person or MACD or whatever, simply by ranking the stocks that are the strongest, it puts the statistics on your side. Now, having a tool to help with that, again, whether it's a daily tool, like a daily looking at, stocks like this, or an intraday tool, like something like this, that's showing us, again, Redfin looks like it's popping up a little bit. I think Redfin was like here when we first saw it. Simply just keeps you in the strongest stuff and keeps you away from things that have hurt a lot of people, specifically in this market, which is, buying the stocks in downtrends, right? There's a lot of people who've had a really hard time in this market, and we're trying to help that out, using kind of statistics and using statistics and using technicals and using technologies to say, hey, Peloton probably ain't coming back. Sorry, Zoom probably ain't coming all the way back. But there's a lot of stuff out there that's moving, right? You could at any time been in this ENCLH or ENLC, sorry, anytime this year, you basically had a nice uptrending stock to outperform the market in. And our hope is that we can find these things and these things can continue. So I apologize if my dog triggered any of your guys' dogs. He's probably protecting me from the Amazon man. So is there any more questions before I hand back over the mic and kind of go from there? So yeah, so we have 3 different products that we're talking about. So the first product is what I sent over there, which is the $17 a month. So that is during the presentation, the P&L graph that I showed of trading the market with these 5 picks. So that $17 a month, it will send you the top 5 ranked symbols each and every week, and with entry points and suggested stop losses, just to kind of help you get started. So that's the email product. It will get you into that system. If you're looking for the software, from there you can go to, let me actually get you a direct link in to our homepage. You can go right there and have a poke around, and that will get you access to the full suite, all the charts, the real-time data. There is no upsell for data. All the data is included in the price. Everything that you see me use will be included in that product. So yeah, perfect. To hosts and panelists, I did it. So yeah, I appreciate you all coming out. If there's any more questions, let me know. If not, I'll hand it back to David. And I think you guys got a whole slew of presenters, and I may actually just go kick me out of panelist mode, and I might just hang out for a little bit and see what everyone else has to say. No, I think we got all the questions, David. I think I've rambled enough. My voice is tickly. They're probably sick of hearing from me.